Hello, everyone, and welcome to the Market Brief and Weekly Outlook brought to you by Money Flow Weekly Market Newsletter. I'm your host, Dr. BJ Love, and I'll be bringing you this week's broadcast. Here at Money Flow, we use time-tested indicators that helps us to navigate these markets with calmness and certainty. Now, uh, for your market snapshot, we see that the tech-led rally slows as inflation pressures build. The AI-driven advance remains intact, but momentum is beginning to narrow as increased inflation data, rising treasury yields, and elevated crude oil prices puts downward pressure on the market. Institutional capital continues to rotate toward relative strength leadership in energy and technology, while the broader market participation weakens. Now, as we can see here in the major indexes, the Dow Jones was off by 0.2% for the week, closing at 49,526. The S&P 500 was plus 0.1%, basically flat, and closing at 7,408. The Nasdaq was off by 0.1%, closing at 26,225. The Russell 3000 underperformed with the breadth weakening and the VIX rising as inflation and as far as inflation and geopolitical fears. I will note that the VIX is still below that threshold of 20 that really gives us to be on high alert, knowing that historically the market tends to move in the reverse direction of the VIX. As the VIX rises, the market um, falls. So, however, since the VIX is below that 20 point below that 20-point threshold, we can expect that the market will continue to grind higher, even though we saw a slight pullback on Friday. Now, the macro drivers for this market condition is CPI inflation accelerated to the highest level in nearly 3 years. Treasury yields and oil prices moved sharply higher. Middle East tensions and the Strait of Hormuz uncertainty continued supporting the energy complex. Now, the strongest sectors, as we mentioned, are the XLE or the energy sectors. This leadership accelerates. Energy emerged as the market clearest relative strength leader, and we depend a lot on the relative strength of an a indice or a sector or a particular stock or equity. We like to partner ourselves with the relative strength leaders. Now, crude oil prices surged higher on geopolitical tensions and inflation fears. Capital flows continue favoring exploration, offshore drilling, and integrated energies. And we also like to follow what we call the smart money. Money is flowing into these energy sectors, and then we are following their footprint. The other strong sector, only like two. The others are, um, um, I guess, they don't have the relative strength that is shown by the energy sector and the technology sector. Now, AI infrastructure continues to drive technology, maintain institutional sponsorship despite broader market weakness. So money is still flowing into technology. We're following the money. That's what we do. We follow relative strength and the money. So those are two of the time-tested indicators that we use to remain on the right side of the market. Now, AI infrastructure spending and semiconductor demand continue supporting large cap tech leadership. Now, the stocks, we like to always feature a stock that is within that sector, and the one that we are involved in, the one that we are invested in is Nokia, ticker symbol NOK. It is a in the technology sector, and it emphasizes on AI infrastructure and telecom networks. Now, year to date, this stock has risen approximately 114%. How beautiful is that? Year to date. Okay, NOCA continues emerging as a major infrastructure and network modernization beneficiary. Institutional interest has accelerated following expanding AI cloud orders, optical network growth. Technically, the stock remains in a powerful long-term breakout phase with strong relative strength versus both the broader market and its telecom peers. So again, you follow the institutions. Institutional money is flowing into Nokia. So we follow its footprint. We have time-tested methods and procedures to do that. And when we do that, that allows us to invest in these leaders that, within, what is this, May? Within 4 or 5 months, the company's price has doubled. We picked this stock up at around $6, $7, and it is trading now around $14. Wow, what a bargain. Now, the key drivers are AI cloud networking demand, optical infrastructure expansion, defense and mission critical communications growth, and strong institutional accumulation. That is what we follow. They have orders already. They have a backlog with the Department of Defense and with the major AI players. NVIDIA invested $1 billion into Nokia to help them with their AI infrastructure and production. Also, we have in this strong sector here in energy, we have W&T Offshore, which is WTI. This is the energy sector, and it is mainly involved in offshore oil production. Now, year to date, this stock has gained approximately 176%, and we still think it has room to run. This was a $2 stock in the beginning of the year, and now it's almost a $5 stock as we speak. Now, WTI remains one of the strongest performing small cap energy names in the market as rising crude prices, offshore production leverage, and supply disruption fears continue fueling aggressive momentum buying. Now, the stock is benefiting from rising oil prices, offshore production leverage, and elevated geopolitical risk. Those are our two picks that we're sharing with you today. Now, the technical outlook for the overall market, while the primary trend remains bullish, internal market conditions continue deteriorating. Market advanced decline lines weaken materially this week. We're going to take a look at that in the charts. Now, the strategic takeaway is the market remains in a momentum-driven advance led by AI infrastructure and energy scarcity themes. However, inflation pressures, rising yields, and the weakening breadth, which is the heartbeat of the market, suggests institutions are becoming increasingly more selective. That's why we can follow them closely, and we can see that they're still heavily invested and adding to their positions in the energy and the technology sectors. Now, the current leadership is concentrated in AI infrastructure, semiconductors, telecom, modernization, and energy and commodity producers. Now, until breadth materially improve in the overall market, relative strength leaders in sectors like the XLE, the energy sector, and the XLK, the technology sector, is likely to continue outperforming the broader market. Now, we here at the Money Flow, we believe that volatility creates opportunity, but only for those who are prepared. Now, this report is prepared for our client distribution. It is not investment advice. It is for educational purposes and informational purposes only. Now let's move on to the charts. Now, as you can see on our foregrid, as we analyze in each of these broadcasts, we can see that we still have a green background on the S&P 500, on the Dow Jones Industrial, on the NASDAQ, and on the Russell, the small cap. Now, I'm going to go ahead and maximize these charts so we can look at them individually. And as you can see, this is the S&P 500. We had a green background. We have a little bit of a hiccup right here at around the end of March, beginning of April. And for 1, 2, 3, 4, 5, for about 6 weeks, we had an unstoppable move higher where we were hitting new highs just about every week. And we're just now seeing a little bit of a pullback last week in the S&P 500. Still have that green background. We follow that. That is our proprietary color-coded indicator that lets us know without all the noise. See, and the goal, we always say the goal with charting is to separate the signal from the noise. Long-term trends dominate, short-term trends fluctuate. So this gives us a very stable and smooth look at the current, past, and the forward-looking outlook for the S&P 500. We're still in, like I said, we are still in that long-term bullish phase. Same thing for the NASDAQ. We're in that green background phase. It's been showing a little bit of consolidation. However, price is above that rising moving average. That is our philosophy, our methodology in the background confirms that. The green background confirms that, as well as our confirming indicator here. The MACD is in a positive posture. Go ahead and moving up to the that was a Dow Jones Industrial, excuse me. Now we move to the NASDAQ. And again, it has been hitting new highs all the way up to 26,000 plus. Confirming in the positive direction is the MACD, and looks like we are in for a continuation of higher prices if the VIX remains below 20. Right now, I believe it's around 18. We'll take a look at it here real quick. And then we move on to the Russell on small caps. And as we can see, for the past 5-6 weeks, it's been unstoppable up. We did have a slight pullback here. However, the prices do remain rising, moving average. And we do have a positive indication on our MACD. So that is the general market. What does I take away? Long-term bull remains intact, even though we see some internal weakness. And when that weakness corrects itself, we should see higher prices in the broader market. And that will also aid in the price increases for the XLE and the XLK, the energy sector and the technology sector, and those two stocks that we have invested in. So what we're going to look at now is quickly all right, what we're going to look at now quickly. Let's go. We're almost out of time. Oh, here we go. All right. So we're going to look at Nokia real quick. And as we can see, we got up to $15.19. So that's going do it every day and every way. We get better and better every day and every way. We grow more prosperous, successful, and victorious.